Hey, Elliot, how are you this week?
I'm good, Joe. Our colleague John is in Missouri. He is leading the Missouri Bankers Financial Crime Compliance Conference. And how are you?
I'm doing well, man. Quite frankly, I'm kind of bouncing out of my seat, but that's per norm. Like I've mentioned in episodes past, I'm always excited when I get a chance to come back on with you guys. And I agree. I think we're going to bounce around a little bit today. So, where did you want to start?
There's a couple things here in the U.S., and they're both relatively short. So let me talk about those real quickly. The first one is John Hurley, who is the Undersecretary of Treasury for Terrorism and Financial Crime. I might have his title a little messed up, but that's pretty close. He gave a speech earlier this week about an initiative that Treasury is going to go through to simplify the SAR process, both presumably the form and also the requirements. He mentioned that they want to simplify red tape. He said everybody acknowledges there's useful SARs and not so useful SARs, and we want to lean into the useful SARs, all of which I think is laudable. There's certainly been discussion about how to make SARs more effective for a long time. I think the challenge, and I'm not saying they won't do this, but I think it'll be important. The SAR is a form that has a consumer and a producer. The producers are all the FIs who have an obligation to file them, and the consumers are law enforcement. And I think it'll be really important for Treasury to go through a comprehensive set of conversations with both of those groups, probably together, so that whatever simplification or change process they go through doesn't impact effectiveness just for the purpose of simplification. I'm hopeful that that's how that process will go. Yeah. I'm sure there's a bunch of folks who will listen to this who will nod their heads, whether they're in law enforcement or in FIs.
And my mind goes back to a former colleague of ours that mentioned the 3-point system for SARs, either happy face, no face, or sad face. So shout out to you know who you are, but maybe that'll finally make it into to the new SAR regime.
Yeah, I guess not, but one never knows. The other one that I just wanted to mention, the Department of Commerce has within it the Bureau of Industry and Security. We've talked about them before. They're known as BIS. They maintain an entity list that on which they put the names of companies and or countries that have been determined to provide significant risk of being or becoming involved in activities contrary to the national security or foreign policy interests of the U.S. What this list does is if you're on it, it imposes additional license requirements or can limit the availability of most license exceptions for exports, re-exports, and in-country transfers. Why do I think it's worth talking about? Because this is a tool that sits in many organizations next to or adjacent to their sanctions compliance program. If you are now banking or providing services to trade-based companies, or you plan to start doing that, you need to be aware of the BIS requirements, become familiar with them, and be sure that your BIS compliance program is running appropriately. So these changes come up periodically. They do have to be published in the Federal Register, so you can always track them that way by putting an alert out for BIS and Department of Commerce. So that's the U.S. stuff. Well, North America for just a moment. FINTRAC, the FIU in Canada, put out a reminder that beginning the 1st of October, some new requirements that were adopted earlier this year and that John and I talked about back in the spring when they were adopted, including a requirement that real estate agents and brokers starting October 1st will need to verify the ID of certain home buyers in residential real estate transactions. And so there's, like every regulation and rule, there's definitions and all those things. But to the extent that you're covered by this and you're listening to our podcast, or you provide services to people who are covered by this, not because you would be required to help them, but if you want to pass that reminder on to customers, just a reminder that that rule goes live in a couple of weeks.
That's right. Well, and the other thing that I think is just a healthy reminder, even beyond our friends to the north, is, FINTRAC went on record pretty much saying, verifying the identity of a person or an entity removes the anonymity from financial transactions. So just more of a call to continued action. Hey, KYC, onboarding, things of that nature really do help in terms of just uncovering some of the non-transparent areas of a financial transaction.
So, Joe, I know you saw an interesting item that related to a new approach to sanctions avoidance.
Yeah, and this one is just a quick shout out. So I did see a recent article. It was written, I think I saw it on Reuters. Essentially it's reporting on the exclusive wheat for Chinese cars and how Russia is turning to the barter system to once again try and figure out ways to skirt the overall sanctions that have been thrown their way. It was just more of a revelation, quite frankly, Elliot, that, in some ways, congratulations and hats off to the folks that are actually looking at how to implement these sanctions. And it's very clear that they're having an effect. And it was also just more of an eye opener that, hey, there are still some really old school ways, i.e., I can't remember the last time I heard the term barter come up in, a financial discussion around the exchange of quite frankly, value, right? Goods and services. But, just again, I thought it was just an interesting little tidbit in terms of there's always a way. What I would imagine is quite a few bags of beans or wheat for a fully functional Chinese car.
Yeah, that's probably not happening at the retail levels. Guessing.
I don't think so.
Probably not.
I think you got to bring out the giant scales too.
Exactly. So the FCA in the UK is in the process of working on new rules for crypto firms. They're in what is effectively the comment period, and they've given an indication coming out of the comment period that they're likely to give some crypto companies exemptions from some of the rules that apply to banks. But they're also indicating that they're likely to tighten some of the measures in other areas, such as cyber attacks, that it considers more relevant to crypto firms. I think this is an interesting point in the progression of crypto moving into the general economy, both locally in various countries and then globally. And regulators, many of whom are at least guided by the recommendations from FATF, in trying to bring their own updated regimes that will apply to crypto online, but also size them in a way that does what they should do, which is requires compliance with things that present the greatest risks and recognize that different organizations may operate quite differently, and therefore the regulations have to fit. The final rules won't be published until 2026. It'll be interesting to see, as those final rules come out, exactly how the UK ends up fine-tuning this. But it'll be an interesting indication as other jurisdictions around the world continue to figure out how to regulate the various players in the crypto space.
Yeah, no doubt, right? And I think in terms of overall change that we're seeing around the world, I think in a different flavor, I saw something that came out of Swiss Parliament this week. Did you happen to see their approval of their newest AML reforms?
I did, and it was interesting because the original undertaking by the Parliament was to implement some of the FATF recommendations related to gatekeepers like lawyers and trustees and other advisors under their anti-money laundering rules. But in the end, they, meaning the Parliament, decided that getting all the way up to the level of the FATF recommendations was going to slow the country's drive to be competitive. And so as a result, they chose to, I guess I'd say, dial back. They did that also in a recent adoption of a beneficial owner registry, also not going as far as the FATF recommendations. That balancing test between fighting financial crime and really trying to prevent financial crime and being competitive is interesting, but it seems to me that over time, countries that choose not to become that top level, if you will, may find that they're not competitive because other countries don't want to do business there. So we'll have to see whether that's the fallout, and maybe then we'll be able to really analyze whether the competitiveness argument is a winner or a loser.
You know, I have to be honest, I think that's probably the way more objective way of saying that versus what I would have said. So kudos to you, Elliot.
Yeah, politics and compliance are an interesting mix. They just are. They always have been. They are everywhere. And so it's always interesting to see what gets people riled up and jumping up to say, no, we're not going to do that, or yes, we have to do that. Another place where that's interesting is Malta, which has become something of a haven for companies licensing crypto operations, has opposed a push by some other countries in the European Union to have the EU's securities regulator, which is European Securities and Markets Authority, ESMA, to take over supervision of major crypto companies. The government of Malta has indicated that they're comfortable with coming up with common supervision guidelines, but they don't want to centralize the actual supervision. It's interesting that recently ESMA criticized Malta's licensing process, questioning whether its risk analysis of potential licensees was sufficient. So it'll be interesting to see where that lands. The EU is a complex animal because it has member states and then it has centralized activity with the passage of their most recent anti-money laundering regime and establishment of a EU-wide FIU, AMLA, and a unified set of rules that all of the member states then have to adopt. It'll be interesting to see how this plays out. But I think Malta's feeling squeezed because they've been probably happy to be a home for all these licensees, at least from a fee perspective. And now that's there are others that are saying, maybe we should all do it the same. So,
well, and I do have to give them credit. The spokesperson for the MFSA kind of went on to say, quote, "We believe that centralization at this stage would only introduce an additional layer of bureaucracy, which could hinder efficiency during a period when the EU is actively striving to enhance its competitiveness." Elliot, you know me personally. I've been a competitor all my life. I think the last thing that I look at in terms of a performance is, did we play by the same rules? Like, I think that's just kind of table stakes. But again, probably a little bit more of an opinionated take than the objective positioning that you laid out.
Another thing that we saw this week, which in some ways kind of connects up with the BIS stuff that I talked about a little earlier, is that the Basel Institute on Governance put out a notification about one of their working papers, which is Working Paper 58. And it's entitled How Corruption Facilitates Drug Trafficking Through the Port of Rotterdam. And this is a case study of how stronger regulations and laws has forced the drug traffickers to rely on corruption strategies, generally by trying to find ways to corrupt import officials, and that quoting here from the summary, the paper finds that paradoxically a main driver of rising border corruption is increased political attention on and resources dedicated to fighting trafficking, drug trafficking in this case. So interesting to read. For me, it's always interesting when researchers who can come at something, you follow a methodology and then publish their findings, and they don't necessarily track with what you think is happening. I think that's very valuable, not because we want it to be that way, but so that we really understand how the causes and effects are laying out. And so you can find that paper if you just go to the Basel website and search for Working Paper 58.
Bingo. So I think to round off, I had one other on my list, Elliot, and it's really around the rise of underground banking, which I also found kind of interesting. It shares some underlying qualities with what you just mentioned around, as investigation or kind of pressure is added to some regulatory areas. I think there was some interesting stuff that came out of this rise of what folks are coining a version 2.0 of underground banking. But in terms of what you saw in these reports, what really jumped out to you?
So this was put out by the Dutch Research and Documentation Center, which is I believe it's a part of the Netherlands National FIU. And to try to distill something pretty complicated into something not so complicated, what they saw was that the underground banking universe has evolved partially driven by the general push by societies to be more cashless. Now, because of the conspicuousness of cash transactions, because there are fewer of them, criminals are trying to make underground banking more sophisticated using encrypted communication and other things like that to make their transactions less obvious or less detectable. Another interesting, more academic paper that tells us that for every push to make things harder for criminals, that doesn't make them get out of the business. It makes them have to change their business model. And there is one more thing I think is worth mentioning, and that is AUSTRAC, the Australian FIU, has put out a reminder to financial services companies to look out for transactions that are indicators of child exploitation. And they talk about red flags and a number of other things. They also talk about the fact that they've been very active. So they had an ongoing operation that was joint between the Australian Centre to Counter Child Sexual Exploitation and AUSTRAC since June of 2022. And it's led to the closure of more than 3,000 Australian bank accounts linked to sextortation payments. John and I talked about sextortion last week because of an alert from FinCEN. So this is a global thing, and child exploitation, along with other types of human exploitation and human trafficking, are something that we've talked about a lot over the years and continue to remind everyone that it's some of the best work that our community can do to identify these activities and pass them along and support law enforcement in their efforts to shut them down.
Absolutely. Right. And I think to borrow from the adage, it takes a village, I think it's just a healthy reminder that all of us have a role to play, especially in thwarting these kinds of crimes, as well as any other that are directly or indirectly linked to financial noncompliance. So just a couple housekeeping items here. I think the first is for those of you that are listening and have not yet signed up, highly encourage, and I think this is actually a really timely topic, but would highly encourage you guys to take a look at the AML RightSource website and go ahead and sign up for the upcoming webinar this month. Elliot, you're going to be moderating a great panel on the topics surrounding enhancing your KYC program. That happens September 25th at 1 p.m. Eastern. But looking forward to that, and any insights in terms of what else we should tell these guys.
We're going to have a great panel, as you mentioned, and it would be wonderful to sign up and listen to us for an hour. We also have coming in October, you can't sign up yet, but you will be able to at the end of next week, will be AML Compliance Best Practices will be our webinar, and great panel lined up for that as well. A lot of good things in the pipeline. Also, continue to watch the website and LinkedIn as we post additional content, which is all in process. Joe, thanks for joining me today. Had a great time chatting with you and look forward to the next time that the two of us are doing this.
Absolute pleasure, Elliot. Thanks again for having me. And to everybody else, have a great week.
Bye-bye.